All right, my friends. God bless you today. Thank you for joining me. We're going to do a quick overview of a spread trade I did this morning. It worked out really well. Again, this is Ben. Happy to have you here. Feel free to visit my store, drop me a line, leave a comment, like, subscribe, and let's switch over to our charts, guys. We want to make a difference in your trading. If you want to reduce your risk, make trading fun and simpler. I know it seems complex, but you want to limit your options with trading. You want to limit the variables. Spread trading turns all markets, all trades into reversion trades. You know, some of you might be confused. When is a market breaking out? When is a market reverting to the mean? And that's a really good, valid question. Because when you go long on a breakout, it turns out to be a reversion and you end up getting stopped out. If you're playing a cyclical game and you want to go short at the high and all of a sudden the market breaks out to new highs, you've gotten caught holding the bag and you got faked out. So what we want to do is we want to simplify it. We want to convert every trade into a revert to the mean trade. So we do that with spreads. Spreads are two correlated instruments that are basically they move together in general fashion, except certain times when they break their kind of stride, when they break apart and they become non-correlated for a short period of time. And that's what we find here in spreads. Now, this is a very unique system for NinjaTrader. No one else has it. And we're looking at times when the spread becomes very far apart, and then we trade them back in a reverting backward situation, reverting to the mean. Um, the mean is this yellow and gray line in the middle, and we're going to go and look for times when the market is far from that median line, that mean line, and we're going to trade it on a reversion back to it. These markets oscillate to one another. And if we're up here at this high, this in this case we're up $300, three green levels above the 100 moving average, and we have an overbought, historically overbought situation. These little dotted lines, gray lines, they show us that the spread rarely gets this far away from the 100 moving average. So we have probability on our side. Very rarely does it go above this upper limit. It did go above that upper limit and it was exhausted, and the move decided to come back toward the median. And that's what we took advantage of. So right here, I went short at about 7:05 in the morning. We have our visually, we're over these little blocks of area, these little what we call overbought zones. And we also hit $300 away from the median. And we have our sell signal dot, which is right here. It's a brown oval that indicates the fast moving average is turning downward. So we want to take advantage of that. I got in on a little retracement pop back up to that level. Took no heat on this trade at all. Took short on two of these spreads. Now the spread itself is one micro gold contract against one Australian dollar futures contract. So I went short on gold, long on the Australian dollar. Together, that's what produced this equity. This spread chart is actually an equity chart of the two instruments together, going short gold and long the Australian dollar. This is what your equity looks like if you are short gold and long the US dollar, Australian dollar. So that's what we did. And shorting this spread is what we did. We went short here. I got out at $100 on the first target. I saw that this little pop occurred and I wanted to get out right where there was some support right in that level. So I got out with a $100 profit here. And I rode to the first target, really the second target, or the primary target is the median. Again, we trade every trade back to the median line. And that was a $153 hit. So we did very well. Now the spread has continued to move southward, and we're getting into this oversold area here, so we might consider going long. one reason to do that is if we take a look at our expectation dots. So this is an expectation line. And what these dots show us is that traditionally in the last couple of days, the spread has moved above the 100 period quite strongly in this time frame. So starting at well, I'm not sure what time that is. This is coming at about 10 o'clock. We expect this spread to be strongly upward. That's what it's done in the past. Okay, so the past movement is no guarantee of future movement, but we are oversold right now, and this thing certainly has a tendency to be moving strongward in the mid part of the day. So we'll keep an eye on that. We're going to wait for our reversing signal. It's going to be a blue oval when we get down. We just started printing yellow bars. Yellow bars is the first warning that we're oversold. Now we're only $200 down below the moving average. I'd like to get it down to 300 before we really start taking a look at going long. Look, worked out very well here as well. So we had a good short this morning. We had a fake out. We had one fake out right here that was occurred much earlier at about 12:45 in the morning. And then right here near the open or the end of Australian session, it did certainly take a turn southward. Here again, we're 3 deviations or $300 away from the median. We got a buy signal right here, and that one was a strong winner as well. But we'll see. We're going to hold on here. Gold is the driving force of this spread. Gold is the driving force. We know that because it takes 30% more of the 6A contracts to equal 1 gold. So if gold is moving, that's where you want to be trading in the direction of gold. Okay. Now the 6A is a little sleepy. It will lag the movement of gold. Now they're correlated because gold and 6A and Australia is a very big mining country. They have a lot of mines. And gold is a critical component of their income or their value as a country, or their GDP. So we are looking at that correlation. As gold value moves up, so does the value of the Australian currency. And that is our proposition. And now it's lately in the last couple of weeks, it's actually become a little more disjointed. If we look at here is the gold chart. Got a lot of marker dots on it. Sorry about that. But the movement of gold in relation to the Australian dollar, this is a daily chart now. We can see it's been pretty tight all the way up until this day right here, 917. For some reason, Australian dollar, for other economic factors, perhaps interest rate changes or other macroeconomic reasons, Australian dollar has gone on a downward trajectory while gold has just rallied like crazy. So be warned, this is kind of broken in its in step with, let's switch over to micro gold futures. We want to go to micro. Why can't I find it? There it is. Let's get rid of that. So for some reason it has broken its correlation. So we do want to be wary of that. There is still some correlation here on a daily basis. So those 2 days were up. This day, Australian dollar was down. Gold was up. This day was both up. This day was both down. This day was strongly down in the Australian, kind of a doji in gold. These 2 days were up. These 2 days are down. So there is a little bit of correlation still. I'd have to do an analysis to see how the actual correlation values turn out. But you can see, although Australian dollar is trending downward, there is still a correlation on a daily basis of gold versus Australian dollar. Sometimes they do diverge. This day was a strong down in Australian dollar. This was a little bit up in gold. That was on the 7th. Uh, Gold moved up quite strongly. Australian dollar had a high closing doji. This was a perfect correlation right here. Gold was down, Australian dollar was down. So that's what we're looking for. We're looking for times when these two instruments come in correlation. All right. Well, I've talked a lot already, guys. Again, I look forward to hearing from you. Feel free to leave a comment. I would love to have you like this video. I would love to have you subscribe to this video. Gotta say it. And looking forward to seeing your comments. Email me if you have any more further questions you don't want to share in the YouTube comments. That's fine. Visit my store. I'm right there at store.sbgtradingcorp.com. Let's get your trading back on track. I will help you pass an evaluation. I will help you take your spread trading to the next level, reduce your risk, increase your profitability, and win every day. That's our goal. And that's what we've been accomplishing here in our spread trading. All right, y'all. Thanks again. God bless you. I hope you're having a good week. Here we are, October 14th, and looking forward to seeing you tomorrow. God bless. Take care.